Hello everyone, welcome back to another GME video. So I just want to go over how Metric Pro works, and we're going to look at like technical indicators like the RSI, MACD, moving averages, stuff like that. So um, essentially when Metric Pro, the one in the pink line here, when this indicator is above the price, it's bearish, and when it's below the price, it's bullish. So take a look here. The earnings of June, we saw some nice moves up, but when we started to see some candle closes below this pink line, price was bearish. It just continued to be bearish all the way down. It was bullish for a short time here and continued to be bearish until we saw some nice candles that gave us this nice pop here. So if you were playing this, you would have wanted to wait until here, possibly by calls, and then, well, it would be history. So what we're seeing now is price trying to cross above 25. So like I mentioned earlier, if Metric Pro is below the price, that's bullish. So right now, price is currently above Metric Pro, so that's bullish. So what we want to see tomorrow is a continuation of this, where you continue to build candles above this price here, and this trends down while price goes up. That's kind of what you want to see. Yeah, let's dive into the RSI. So as you can see, the RSI has crossed the 50 line. That's pretty bullish. Ideally, you want the line somewhere up here for a bull confirmation, but just crossing that line is already pretty good. It's a good start. Let's take a look at another ticker. Let's take a look at Apple really quickly. Just ignore the drawings here. So right here is what people would generally call overbought territory, but it's just bullish. And if it's below the 30 line, so this is above the 70, this is below the 30, right? This is bearish. But the moment you start to cross below here, like this, that's generally bearish, right? So if you're looking here, it's trying to get above the 50 line, couldn't, and it's just continuing down. That's bearish. So right now over here for Apple, it's crossed that center line, so that 50 line, and it's staying in the bull territory. So I mean, the chart speaks for itself. I mean, Apple went from 160 to 232. That's crazy. So let's go back to GameStop. So what we're seeing back here, it's in bullish territory and had to cool off because it was all the way at 94. Like, holy cow, that's crazy. Like, I'm just gonna scroll all the way. Like, when was the last time we even hit that? That was over here in January. Like, the sneeze events, like, that's nuts. So the indicators had to cool off, guys. It just had to. And then over here, I mean, it was bearish, right? Oh, okay, not sure what I did there, but that was bearish right here, see? So this whole zone right here from 11 to making the low, like, that was bearish. And generally loading up there was really, really good. So let's, I'm trying to delete this. There. All right. Okay. So right now, that's what we're looking at. The MACD. I mean, guys, like, there are so many bullish things happening right now from a technical standpoint that, like, I don't know how anyone could be bearish Like, and GameStop has like $4 billion in cash too. Like, fundamentally, like, that's crazy. So looking here, generally when these lines have a cross from beneath the 0 line, so let me just mark this here for you guys. Do a dash, make it bigger, make it yellow. All right, so now you can see it. Okay, so this yellow dotted line. Okay, so if you have a cross right here, okay, and you cross this yellow line, okay, which is right here, that is bullish. That is extremely bullish. Okay, and I mean, like, just look at what happened to GameStop during those events. Okay, while the other line technically hasn't gone below this yellow line, we're still gonna have a cross with this blue from below the yellow. So from below the 0, you're still gonna have a little cross. So that's still bullish. And if you look at the times we've crossed, so we've crossed from above here, and I mean, you've seen a move up. I mean, this is, I mean, MACD is a lagging indicator, but it still tells you a lot. From bearish to bullish divergences. So this is still really positive, you guys. Like, you got your cross here, and then your move up. So cross and then move up. Although it wasn't a lot from 12 to, I mean, that is a lot, 12 to 18. Like, it's still a lot for people buying calls. Like, but that's really bullish. So let's close that out. Let's open up the Bollinger Bands. All right. So the Bollinger Bands here, guys. Okay. They don't want to stay like this tight. That's basically, it's in their nature. They want to expand. All right. So if you look here, it's tightening up. Then you get a explosive move up. And over here, you're tightening up. And hopefully, you're going to move up. So let's open up Investopedia here. All right. Tightening of the bands. What does this mean? All right. It suggests a period of lower volatility and consolidation. All right. So that's what we're seeing, right? So we're tightening up here. So we're seeing periods of consolidation right here and periods of consolidation right here. All right. Often a precursor to a major price move or breakout. All right. There you go, guys. That's what's going on. So let's load up the 4 hours here. So we'll get a better look. All right. So you consolidated, right? This is basically flat. The bands are tightening up. Then it moved up. Then over here, tightening. Somewhat of a consolidation right here. And then you move up. Tightening, consolidation. And then hopefully you're making another move up. So that's really bullish. All right, let's get rid of these triangles. Let's take a look at our moving averages. All right, before I explain this part, let's go back like all the way to 2020. Okay. All right, it's kind of looks similar. All right, it's kind of looks similar. But let me turn off Metric Pro here just so you can see. All right. You came in. Well, first of all, you had your death cross right here, so that's not really that great. So price moved down. Anyways, you had a bull cross or a golden cross right here. So this is bullish. You got your cross right here. The 200 moving average sloping upwards, so that's really positive too. 50 was sloping upwards as well. And as the 50 was moving up, right? It's moving up right here like this. Price was being supported, right, by the 50. And if it were to break below, then it would just test the 200, which is not a big deal. But that's kind of what we saw here. And it led all the way whatever it was from the low here all the way to the high here. It was just crazy. So, and then when we first saw our first 200 moving average test, which was somewhere here in November 2021, we saw a nice bounce up. Tried to test it again, it just couldn't do it. So fast forward a little bit here, and as you can see, from this point in time, December 21, the 200 moving average just started to slope down, and it was just, I mean, just look at this. It's a slide, guys. It's a slide. Whee! All the way down. It was only until this moment, right here where we are, where the 200 moving average started to slope up. Right? So this looks really familiar, right? So let's take a look. You got your 50 moving average moving up, supported by price, right? And you got your 200 moving average in the yellow here moving up this way. So that's really, really good. So what we want to see is price continuing to be supported by the 50. And if it breaks down, then, I mean, we're going to have to fill in this gap right here. And then hopefully test the 200. So if the 200 was sloping upwards this way, right? And the 50 was sloping up this way, and price sort of broke down, right? It would test the 200, right? So let's go back over here. So what happened when the 200, or when price tested the 200 moving average the first time, right? You got to bounce up. So, so let's go back down here. All right, so now we're looking here. So if we do fill this gap, right, it's not over. It's not over, guys. Like, this goes up, right? The 50 kind of goes like this, which is not a big deal. Price moves down, fills the gap, support, move up, right? So that's what we're looking at. But right now, this is really, really positive, you guys. Like, you got your golden cross, and this is literally sloping upwards. Like, you could see it right here, okay, compared to what we're seeing here where it's sloping downwards. And yeah, so I mean, like, let's take a look here a little bit. Let me zoom in a little bit closer. Sorry, that was my bad, you guys. There's here in this rectangle that I've drawn, this is basically your support range / gap fill. So if price were to break down below here, expect a bounce up, major bounce up from this area here. But using other technicals, I mean, I've been saying it for a few weeks now. I mean, you got to get above 25. So what I would like to see is a candle close above 25, and that would indicate that GameStop is bullish and price will move up. And again, so let's take a look here. I mean, let's turn off the moving averages. You've got a candle close above this, right? And price moved up. It's pretty simple, guys. So over here, you got a price or candle closed below. Well, price moved down. Over here, where it's touching, technically doesn't really count because it's not a candle closed below. So price, as you can see here, right, close above, so it's not touching. Touches here, but it doesn't close below, and it continues higher. So if I were entering this and I was playing, I would buy calls here, not financial advice, and I mean, just literally ride it, right, until this area here. I mean, you have to take profit at some point. But for me, mostly just, I'm mainly all in shares right now and just enjoying the ride, you guys. But yeah, right now, once I see that price having a close above metric pro, that's gonna be really, really bullish. So yeah, let's talk price targets. This is like our last part of the video. If you made it this far, thanks for sticking with me. All right, so assuming this is the low and we don't go any lower and we don't like fill this gap or anything, let me turn this on. So we're gonna go here. So basically you want to take your fib from your high to your low, and then you want to see. So basically every time you pass a certain level here, and you stay in that level, your chances of making it to the next one is greater. So what I mean by this is, if you're here, if you break above the 236 here, right? And so price goes above here like this, and it comes down and it builds a base at 26.73. You're very likely to try to make it back to 29. So it's going to go back this way. And if it does make it here, right, and it builds a nice base here, where it kind of just goes like that, right? Well, your next chance of moving up here is greater. You're more likely to make it to the 0.5 now. So that's basically what this is. So over here we saw a slight rejection, just a slight rejection. And so what I want to see is for GameStop to at least close. There's a little tiny gap on the 1 hour, right here at 24.58. So what I would like to see is that being closed and then us moving forward. But let's go back to the daily. So again, you want to see price break this 26.73. Just literally just mark that on your chart tomorrow, and if we can break that, then if you can break that and you can hold a base here at that level, then you can test 29.90, basically $30. And if you do get $30, again, you build your base there, make it to 32. Ultimately, I would see some rejection around this area right here. So around the 33 to 35 area. So that's another big area for GameStop. Mark that on your chart for sure. And then another big area, let's turn this fibs off. I mean, it's just breaking 60 really, like 60 here. And you could even see it over here. It's just 60 just been playing like a big role. So let's mark that down. Okay. And then the next one would be, well, 80, wherever that is. Right here. So mark that down. And the all-time highs over here at 120. So those are your targets for now. And then, I mean, GameStop can get really stupid. So we'll see. We're just going to trade what's in front of us. We're not going to do any hocus pocus stuff. But yeah. Thanks for watching, guys.